This super boring scalping strategy made me a millionaire, and it consistently gives me wins like this, and this, spending less than an hour a day on the charts. It's so stupid simple that even a complete beginner can follow this. So in the next few minutes, I'm gonna break down the entire strategy step by step, but we're also gonna have a look at 1 month worth of back testing to show you that it really works. Before we get too far into this video, I want to show you my 7-day P&L. In the last 7 days, I made $86,382. I'm not showing results to impress anyone. The goal here is that you walk away with a proven system and make money by trading less and not more. Before we get started, there's something I want to make very clear. This strategy works in absolutely any market. Crypto, Forex, futures, or stocks, it doesn't matter. This strategy works. But it will only work if you follow these 5 simple steps. Before I show you the entire strategy, it's important that we understand market dynamics, and the first thing we'll look at is different liquidity types. We're working with a few different types of liquidity. The first one being equal highs and equal lows, which is basically just clustered stop orders. The same thing can be said about trendline liquidity. It's all about figuring out exactly where retail stop losses are clustered. Then we have 2 types of liquidity. We have external range liquidity, and then we have internal range liquidity. So external range liquidity is the highest and lowest point of a trading range, while internal liquidity is all the highs and lows that are found within that range. The only real thing you have to understand about external liquidity versus internal liquidity is that external lows and external highs is way more significant than internal highs and lows. When we trade this strategy I'm about to show you, there are 2 primary ways we can do this. The first one being following structure. The key here is that a structured trade is primarily based on internal range liquidity and not external. What I mean here is quite simple. First, we establish the trend, which in this case is obviously extremely bullish. Then we find a pullback, which is right here. We draw our Fibonacci extension tool from the low of that pullback all the way up until the recent swing high. That gives us 2 zones, the 71 and the 79%, and that right there is our reversal zone. In case you're confused, this is exactly what I mean with the Fibonacci extension tool. We draw it from the low of the pullback and all the way up to the most recent swing high. It's a little bit different when we want to catch a reversal, because in this case we use external range liquidity. This is the external low because it's the lowest point of the range, and this is the external high. That again gives us those 2 zones. That is our reversal zone, and we will be entering from the first of the 2. Before I show you the step-by-step strategy, I want to show you a 1-month strategy backtest. In September, well then this strategy would have had a 40% win rate, and it would have given you a 15.37% return, which if you're trading with $100,000 equals to about $15,372. Now the 40% win rate doesn't matter too much because the average risk to reward was 2.29. These next 5 steps will determine your profitability. The first step is to identify the setup type. Are we looking for a reversal trade, or are we looking to trade structure? In the example we're looking at here, in my opinion, it does not really look like a reversal trade. I'm looking to trade structure to the upside. And that is exactly when I move into step number 2, which is to wait for a liquidity sweep. This sounds a lot more complicated than it really is. I immediately notice price sweeping this low that you're looking at here. When we're looking for a liquidity sweep, the simple way to describe this is basically a move below a low or a move above a high. So we get this liquidity sweep below this low here, and we don't really get any follow through beyond this point. In fact, we get the exact opposite. Price absolutely skyrocketed, and that confirms our next step, which is displacement. Displacement is essentially an aggressive move with a lot of volume behind it. Again, that's this move right here. Price went down, swept liquidity, and then we just exploded in the opposite direction. That's when we move into the next step, which is the golden reversal zone, as I like to call it. For this, we have to use our Fibonacci extension tool, which you can find in the top left side of the screen. I'm going to draw it from the bottom of the range and all the way up until the high that we've just created, and that gives us our 2 zones, the 71 and the 79%, and that leaves us with just one final step. Enter your trade at the 71%. So I'm gonna grab my P&L tool. I'm gonna place my entry at the first of the 2 zones. My stop loss always goes to the low, and my take profit always goes to the high. This gives us a static risk to reward of 2.4R, which is just picture perfect for profitability. We've placed our buy limit, and yes, I always use limit order. All there's left to do now is play it out and let our system do the heavy lifting. And as you can see, in the span of just a few minutes here, you could have made serious money. This trade took a total of 2 hours and 5 minutes. Now, it could have gone a whole lot faster had we not seen this massive consolidation. Right here, a lot of traders will mess up because their trade doesn't immediately go towards their target. They'll get worried, they'll start to second guess their system, and they will make mistakes, all because of a consolidation. When in reality, all you had to do was let your trade do the heavy lifting and simply have faith within your system. But how does this look when placing a reversal trade? That is exactly what we'll look at in example number 1, which again is a reversal trade. Normally, traders have no idea where to go long within a falling market, and that is exactly where the Fibonacci extension tool comes into play. I'm going to draw it from the bottom of the range, aka external range liquidity, and all the way up until the highest point of the range. Right here we have our system, and the only thing we have to do now is place our entry at the first zone, our stop loss at the low of the range, and our take profit goes to the high. We've created our buy limit here, and all there's really left for us to do is trust our system and let it do the heavy lifting. As you can see, within a span of just a few minutes, you could have made serious money catching the bottom of this falling market. I mean, would you just have a look at the displacement that was followed after hitting our zone? It's like magic, really. I've traded for many years, but this is one of the greatest and most accurate tools that I've ever used. And I give away trades exactly like this one within my free private community on a daily basis. I'm not kidding. Right here's a trade much like the one I just showed you, using the exact same zones. And right here's the full profit, 108%, which equals 72,925 USDT. So if you're struggling to trade on your own, well, then I would highly recommend that you check out the link down below and join our team entirely for free. You've seen how well this strategy can predict reversals, but what if I told you that this strategy is the best way to trade trends? For years, I struggled to follow the trend, and I was always losing. But in this example, I'm going to be following this structure to show you exactly just how powerful these zones really are. If we take a look at the market here, it's pretty clear that we're within a bullish trend. I'm going to identify the most recent pullback within that trend, and then I'm going to hover right up into the left side of the screen and grab my Fibonacci extension tool. I'm going to draw it from the lowest point of that pullback all the way up until the most recent swing high, and right there we have our zone. The idea here is that we now see a second pullback that ends somewhere within our two zones here and then goes higher. That is exactly how we capitalize on trending markets. So let's pull out our P&L tool here, place it at the first of the two zones. Our stop loss goes to the low and our take profit goes straight to the highs. Our buy limit is set, and all there's really left for us to do here is let our system do the heavy lifting. Right here we're filled and it looks phenomenal. Let's try and play it out here to see what actually happens. And there you go. In a matter of 20 minutes, you could have made over $1,000. And this is exactly what I mean. Had you traded support and resistance, let's have a look at your entry, right? We have a clear resistance level that was turned support here, but price never reached it because it reached our zone before the support level. So they all got left behind while we made money. But how do you make this strategy the highest probability possible? There is one specific thing you need to look for. Just by looking at this market, it immediately looks like I'm going to be taking a reversal trade. I'd like to short this up move that we're seeing here, but how do I make it as high probability as possible? It's quite simple. Remember the equal highs and equal lows I was talking about in the beginning of this video? Well, this trade has it. We have 3 lows here, and I guarantee you that there are so many clustered stop orders resting at these very lows. If I now grab my Fibonacci extension tool, draw it from the range high all the way down to the range low, the idea here is that price moves up into our two zones and then immediately sells off because it has a reason to. Again, these equal lows. So let's grab our P&L tool here. This time we're gonna go short at the same exact entry with our stop loss at the high and our take profit at the lows. And as you can see, it was just a phenomenal trade. The problem here for a lot of traders will be this, right? They get so scared, start second guessing their system just because price doesn't immediately sell off. That's because they don't understand market dynamics. A market is supposed to consolidate before a massive move can take place. I mean, just have a look at this, right? We consolidated here and then boom, price absolutely exploded. Same thing happened here. We consolidated and price absolutely dumped. In other words, a market has to consolidate in order for an explosion to take place. But regardless of how good a system looks, there is one thing that determines your profitability. And it isn't your system, it's your risk management. On my prop firm accounts, I aim for an average win rate of 40% and an average risk to reward of 1 to 2. But I only take one trade a day, and I do that religiously. There are two primary ways we can go about our risk. We can either go the conservative route or the more aggressive route. Now, if I'm conservative, I will attach 0.25% risk to any trade that I place. The average attempt for me to pass this account going the conservative route is 1, and the average pass time for that account is 120 days. When I'm feeling more aggressive, which I will during certain months, well then I attach 1% risk to any trade that I place. The average attempt that I use to pass an account like this is 3, and the average time it takes to pass is 30 days. On my personal account, this is entirely different. Not the win rate, not the risk to reward, and not the one trade per day. No, what I'm talking about is my risk approach. When I'm conservative, I will attach 3% risk to any trade that I place. That gives me an average monthly gain of 12%, and the highest possible loss that I can have within a month is 24%. When I'm more aggressive, I will then up that to 5%, which will give me a monthly average gain of 20%, while the highest possibility loss I can have is 40%. If you're new to trading, 3% or 5% might not seem like much, but let me show you exactly why this can make you endless amounts of money. Let's assume you have an account size of about $1,000. Any 3% gain you make on that account equals to about $30. If we then up that to $10,000, that same 3% gain is now $300. On $25,000, the same 3% is now $750, and on $50,000, it's now $1,500. And trust me, this goes a whole lot faster than you could possibly imagine. This can be so insanely difficult to figure out on your own, and that is exactly why I created my free private community. Right here, we're looking at our school, and you'll get access to an entire course from an action plan to a scaling system and an entire blueprint. Not only that, but you'll also get access to my personal Telegram account where I give away all of my trades and all of my analysis. We were originally going to charge $997 for this program, but then I decided to give it away entirely for free. Well, at least for a couple of people. There's a limited amount of spots. So if you're tired of overcomplicating your trading and you want to trade with like-minded traders entirely for free, well then I highly recommend that you check out our link down below, join our team today, and I will see you on the inside.